Welcome to our in-depth analysis of EZGO Technologies Limited, a stock currently trading at 0.175 and attracting attention for its volatile yet intriguing technical signals. In this video, we'll break down the latest trends, technical indicators, and potential scenarios for EZGO, helping you understand whether this could be a turning point for the stock. We'll start with a general overview, then dive into price and volume dynamics, moving averages, and more. Whether you're a trader or investor, this analysis will provide a comprehensive look at the opportunities and risks present in EZGO's current setup. EZGO's recent price action shows a mixed technical picture. The stock is trading near its annual lows with a 52-week position of just 5.74. However, the technical score of 73.71 suggests moderately bullish health. The risk thermometer indicates moderate risk, with a beta of 0.315 pointing to lower volatility than the overall market. Trend indicators are conflicting. While the ADX and ADXR reflect a weak trend, the Arun up and down suggest a possible trend change. Williams %R and CCI 20 both point to oversold conditions, hinting at recovery potential. The stock appears to be bottoming after a significant decline, with recent price action challenging the bearish moving average alignment. Volume analysis reveals a dramatic story for EZGO. The VWAP sits at 0.838, far above the current price, highlighting substantial undervaluation. Volume indicators are sending mixed signals. On balance, volume suggests accumulation, while ADOSC points to distribution. The volume ratio and growth rate are exceptionally high, confirming a surge in trading activity. Money flow index is also elevated, indicating strong money flow despite price weakness. This pattern suggests a battle between buyers and sellers, with high volume possibly signaling capitulation or institutional positioning. The dollar volume is significant, but underlying selling pressure remains, making this a critical juncture for the stock. Look at moving averages shows EZGO is deeply oversold, but may be stabilizing. Short-term averages like SMA5 and EMA5 are now below the current price, indicating some recent strength. However, medium and long-term averages remain well above, reflecting the severity of the long-term decline. Specialized averages, such as TEMA, DEMA, and COMMA, show mixed signals, while adaptive moving averages like MAMA and FAMA are still above the current price. This suggests the downtrend is weakening, but not yet reversed, and traders should watch for further stabilization before confirming a trend change. Diving into technical indicators, we see early bullish divergence in the MACD, with momentum shifting slightly positive. RSI values are recovering, suggesting improving momentum, but stock RSI indicates short-term overbought conditions. Stochastic indicators remain weak, while momentum and volatility indicators are mixed. Volatility is elevated, with ATR and true volatility both confirming a choppy environment. Trend indicators like ADX and ADXR show weak trend strength, but hidden signals from adaptive moving averages and TRIX suggest the downtrend is slowing. Overall, the technicals paint a picture of a stock in transition, with both risks and opportunities present. Linear regression analysis confirms the long-term downtrend, but hints at possible stabilization. The negative slope indicates a persistent downward trend, but the current price is trading above the predicted regression line, which could signal a reversal. The moderate R-squared value suggests the trend is significant, but not overwhelming. High deviation from the regression line points to increased volatility and potential for mean reversion. This means the current price may not be sustainable in either direction, but the position above the predicted value leans slightly bullish for now. Looking ahead to the next trading day, technical factors suggest an opening range between 0.17 and 0.18. The pivot point at 0.19 serves as a key reference, with support at 0.137 and resistance at 0.228 defining the likely trading range. Short-term moving averages and the convergence of adaptive averages, MAMA and FAMA, support the estimate. The recent surge in volume and oversold conditions point to a strong open, with the possibility of testing the 0.18 level before the market finds direction. Exceptional volume growth suggests continued high interest at the open. EZGO's current price faces immediate resistance at the 0.19 pivot point and 0.228 resistance level. The upper Bollinger Band at 0.202 adds another resistance layer, while the 52-week high at $1.18 marks major long-term resistance. On the downside, support levels are found at 0.137, with additional support from the Bollinger Band middle and lower bands. The stock is currently positioned near the middle of the Bollinger Bands and above key short-term moving averages, suggesting potential for range-bound movement with a bias toward testing resistance. If momentum continues, there is substantial room for upside. ATR 14 value of 0.026 provides a basis for estimating the intraday range. With the current price at 0.175, the theoretical high is 0.201 and the low is 0.149. However, given the exceptional volume and volatility indicators, the actual range could exceed these projections. Volatility breakout and true volatility readings confirm an elevated risk environment. The stock may test the upper end of this range, especially if momentum continues, but support at 0.137 remains a key downside target if the trend reverses. In a bullish scenario, EZGO breaks above the 0.19 pivot point with strong volume confirmation, targeting resistance at 0.228 and the upper Bollinger Band at 0.202. Key indicators supporting this move would include a positive MACD histogram, RSI moving above 60, and continued high volume. The exceptional volume growth rate suggests this scenario has strong potential, especially if institutional buyers are stepping in. If momentum sustains, the stock could see a rapid move toward higher resistance levels. On the bearish side, failure to hold above 0.17 could lead to a decline toward support at 0.137 and potentially the lower Bollinger Band at 0.132. This scenario would be confirmed by a negative MACD, RSI dropping below 40, and decreasing volume. The gravitational pull of long-term moving averages above the current price could accelerate the decline. Traders should be cautious if the stock loses momentum, as the downside risk remains significant in this environment. Neutral scenario would see EZGO consolidating between 0.17 and 0.19 as the market digests the recent volume surge. Technical indicators would remain range-bound, with RSI between 45 and 55 and MACD hovering near zero. Volume would likely decrease as the stock establishes a new base. This scenario allows for a period of stabilization, giving traders time to assess whether a new trend will emerge or if the stock will continue to trade sideways. EZGO presents a high-risk, high-reward opportunity at current levels. The risk thermometer shows a beta of 0.315, indicating lower volatility and a risk-reward ratio of 1.4, which is favorable for risk-tolerant traders. However, the stock is near its annual lows, and the long-term downtrend remains intact. The exceptional volume anomaly suggests significant institutional activity, possibly signaling a bottom. Still, if the recent volume surge fails to sustain, the downside risk is considerable. Monitoring key levels and using stop-loss strategies is essential for managing risk. For traders and investors, the 0.19 pivot level is a critical reference point. A break above this level with volume could trigger a bullish move, while failure to hold above 0.17 increases the risk of a decline. The stop loss for long positions should be set near 0.137, which is the next major support. These levels, combined with the current technical and volume conditions, will likely determine the stock's direction in the coming weeks. Staying alert to price action around these points is crucial for effective trading. In summary, EZGO Technologies Limited is at a critical juncture. The stock is technically oversold with early signs of reversal, supported by a surge in volume and bullish divergences in key indicators. While the long-term downtrend remains, the current setup offers substantial upside potential if resistance levels are cleared. However, the risks are equally significant if the recent momentum fades. Traders should closely monitor the 0.19 pivot and use disciplined risk management. The coming days could be decisive for EZGO's next major move.